McCormack's office in Duncan, Oklahoma, visiting with him as part of the Oklahoma Bank and Commerce History Project. So, thanks again, and thank you for the cup of coffee. And if you would, just begin by telling me about your association with the Bank and Business.
Okay.
What brought you into it, and as we go along, maybe pick up some milestones about Stevens County in particular. So, thank you.
Well, I do have a story about community banking in Oklahoma. This may or may not be the kind of things you're looking for, but I grew up between here and Lawton. My family, parents, grandparents, aunts and uncles, all banked at the Bank of Elgin, which was owned by a fellow named Bailey Stevens, and the president of the bank, I think at that time, was Harry Leonard, who ultimately became the state bank commissioner for Oklahoma. When I was 17 years old, my father was killed in an accident. And so we're all gathered up at my grandparents' house and notified all the relatives and that sort of thing. And my grandmother said, "Has anyone called Harry?" And right after the family, it was Harry, the banker. And something just clicked, and I first thought, well, why are we calling the banker, but I mean, that's community banking personified, that after the family, the banker's the next guy that we would call with news like that.
That's exactly the kind of thing I'm looking for. That's wonderful.
Something clicked, and I was raised on a ranch and started out to school at Cameron in agriculture studies and things like that, but I don't know, that never left my mind. So I ended up going to Oklahoma City and going to the Oklahoma School of Banking, which was like a trade school for bankers. 101 Park Avenue. This was in 1962. And I worked, while I was going to school there, I worked part-time at the First National Bank of Oklahoma City, right downtown.
Oh, that well.
And I stayed there a year, and then had the opportunity to come back to, I kind of want to get back in this part of the country, and I talked to bankers around in Lawton and Duncan and around, and I came to Security National Bank in Duncan, and interviewed there, and just left there thinking, well, if this bank will hire me, I'll come back, and if not, I'll just stay where I'm at. Something about that bank seemed to fit, so a week or so later they called, and I came back to Security in Duncan. Stayed there for 22 years. I kind of worked my way up from the bottom to cashier, CFO of the bank, in charge of all operations and data processing and things like that. And in 1985, went into business for myself to do consulting work with banks. And 26 years later, here we are.
Well, so that's really First National in Oak City, which coincidentally, you were there during the Vos years.
Yes.
Before the Voses, there was a Johnson.
And I don't go back to that. I remember Mr. C.A. Vos Sr., but I don't go back any further than that.
Well, the handoff to the Voses was in 1944, and at that time my granddad was president of that bank.
No kidding.
And yeah, his father-in-law and his uncle were founders of it.
Well.
Yeah. I mean, it's kind of a direct line back to, actually the very day it stayed there, really. Anyways, it's a pretty interesting story. I never went into banking myself. My brother did. He's up at Stillwater National in the city.
Okay.
But I kind of backed into it this way because it's just a rich, interesting history. In fact, I was just in the lobby yesterday.
Really? And it's still there?
Yeah, it's just, you can hear a pin drop. Coming and going, people in their offices or whatever.
Yeah.
But it's just a big, beautiful place to be.
Probably been 10 years since I've been there.
I haven't changed much. But anyway, well, maybe, why don't you tell me a bit about your experience there at First National?
Well, I was working part-time while I was going to school, and I started out in the transit department, which was an area where all the checks were cleared. First National was the principal correspondent bank in the state at that time, so most community banks around the state sent their outgoing cash letters, their checks for collection up to First National or Liberty, but First National had the lion's share of that business. One of their best customers was Security National Bank in Duncan. I kind of became familiar with them. And it was a big deal because Security Duncan had the Halliburton account. So there was a lot of checks, a lot of items to process. So I was a gopher. I worked in the mail room and ran proof machines and things like that. And one of the things I remember, a couple of things when I was a gopher, I had to do the clearing over at the Federal Reserve every morning. And once a month, armored cars would come and park out in front of the Fed, and they would pick up a bunch of cash and take it. I think Fort Sill was still paying in cash at that time for the military. And so I'm walking down the street with this big sack full of checks on the two-wheel cars, and here's the armored car sitting outside, and a couple of guys standing outside with their pistols drawn, but they had them down by their side, and if you look up, there was little portholes up there, and there was a rifle sticking out of each one of them. Here I am with a card and a sack, but I made it through.
Oh, man. What do you remember about CA, though? Did you know him at all well? Or
I did not. I was, at that time, there was probably 450 employees in the bank, and I was up on the fourth floor sorting checks and things like that, and but I met him, but didn't have much any direct contact with him.
Okay. But so, and that lasted about a year. About a year. So then, make the transition over to Security National. What do you know about that bank, maybe some of its earlier history?
Okay. I believe that bank was chartered in 1919 as a state bank, and in 1921 converted to a national charter. And somewhere not too long after that, a fellow named L.L. Humphreys purchased the bank. He was still there in 1963 when I came to Duncan, and still active in the bank. He was chairman of the board and principal shareholder, but still had an office at the bank and came and worked every day. The president of the bank at that time was Roy Patton, who had previously been the state bank commissioner. O-N, P-A-T-T-O-N, Roy Patton, R.B. Patton, I believe. And Mr. Humphreys owned the bank or owned control of the bank until, I want to say 65, 66, something like that. He sold his interest in the bank to Halliburton's Employee Benefit Fund. But that didn't last long because the Bank Holding Company Act of 1968 came along, and the benefit fund, because of that new law, either had to sell everything else they owned or sell their interest in a bank because they couldn't have the same ownership with banking and other non-banking entities. So they sold the bank to the McCaslin family, local. Mac Oil Company was their business. They were in the oil business. And Mr. McCaslin had done very well. T.H. McCaslin Sr. Done very well in the oil business. His son-in-law, Jack Maurer, was interested in the banking business and came on the board and ultimately was chairman of the board and represented the family's interest in the bank until they sold to Bank First,
Okay, that was
7 or 8 years ago, or whatever that was.
So was it called Security National then until it was sold?
No, it was Security National, and it was sometime, I left in 1985, so 90-ish or somewhere, maybe it's later than that, I guess. They changed to, their name to Amquest.
Okay.
Security National was sort of the, and I guess helped out by having the Halliburton account all of those years. Duncan is the hometown of Halliburton Company. This is where Halliburton started. But they were the principal banking entity in the southern half of the state. The other major banks outside Oklahoma City and Tulsa at that time were probably Central National Bank in Meade and the First National Bank of Bartlesville.
Okay.
And then Security, Duncan were kind of the principal country banks, we call them back then. I guess we call them community banks now.
So those are Central National in there? And the other one?
First National Bartlesville.
Okay.
Of course, they had Phillips, Phillips Petroleum in Bartlesville.
And then maybe the third one would be Security. I mean, in terms of, smaller towns, Security National might be about the third.
Well, as far as the size of the city, but the size of I think those banks were pretty much equal, as I recall.
I had an opportunity to interview Joel Champlin. Of course, that would have been the First National. And he never was in the banking business so much himself. It's been closed for 25 years.
Yeah.
Went to part of the 80s.
Yeah, maybe not quite that long, but yeah.
And then I did visit with Mark White. So he was an Osage Federal. That's in Bartlesville.
Okay.
But that's interesting to think of those three as kind of the three outside the metro area.
And there is a fellow that's still I believe, Central National Enid named Brud Baker, B-R-U-D, Baker. I don't know if that's his real name or not, but he goes all the way back to those days, so he might be a good contact for you.
Right. Central National. Okay. Sorry, I got off the mic.
Yeah,
good.
Well, that's
So, Security National till the early 80s, then Amquest. And the dam question sold the bank first?
Sold the bank first, yes.
Okay.
And it was a couple of years after the State National Bank in Marlow sold the bank first.
Oh, okay.
And Security was a regional bank and provided some correspondent banking services to half a dozen or so banks in this area, and was beginning to acquire other banks. The same owners, this is before we had branch banking in Oklahoma, but the same principal owners, led by the McCaslin family, chartered the American National Bank in Duncan. It was on Highway 81 and Elk. So we chartered that bank, and it sort of operated like a branch, but before we had branch banking in Oklahoma.
Okay, so the McCaslin family was principal in security, and then they went out and charged another bank.
And it ultimately was merged in once branch banking came around. It was merged in with security and became a branch.
Okay.
Security also acquired the Cash Road National Bank in Lawton.
On Cash Road, yeah.
Which is 36th and Cash Road, I think. And later acquired the American National Bank in Lawton. And I guess in between there acquired the Exchange National Bank in Ardmore.
Wow. So this really was kind of, Security National was kind of the banking heartland for the Southwest, the whole kind of southern tier.
Like I say, it's probably the in that south of I-40 maybe, and of course this bank first started out in Shawnee, and that's where their headquarters were for years before they moved to Oklahoma City. And they were, of course, much more aggressive than anyone else in the state with mergers and acquisitions and things like that.
The story I was with David Rainbow yesterday.
Okay.
And a couple hours with him. And I just saw his dad. He was in the office, and he just got back from a 3-week train trip across Siberia.
No kidding. No kidding. He's a great guy.
He's a terrific guy. I never met David, but I've known Gene for a while. And the first thing he said, well, what you want to do is buy farmland in Siberia. Global warming, that's going to... David said, well, Dad, I don't want to be the first one.
Sounds like a Brooklyn Bridge deal to me.
It might be. I don't think I'm going to do it. But they're great fellows.
Oh, yeah.
But so, okay, so really, like south of I-40, Security National would be the go-to bank.
Then I guess the oil bust in the 80s sort of slowed everybody down.
Tell me about, so you left the mid-80s,
85.
So, probably a good time to get out of the business. But tell me about your experiences. Here we're kind of in the Anadarko Basin, right? We were just not too far from that region. So maybe tell me a bit about the boom and the bust as it affected your bank.
Well, one thing I remember about the energy business is one time the bank examiner came into the bank once and asked me for a list of all of our loans that were tied to the energy segment of our economy, and I just handed them the entire journal and said, well, they probably all are, whether it's the oil company down the road or the oil servicing or the men's store across the street from the bank. We're all tied to the energy business here. And I guess as with any boom and bust, it's hard to know what's real or what's many of those guys think it's always going to be this way? He said, probably about half of them. And it was kind of that way in the energy business with the boom and the increase in oil prices, and it had a lot of impact, a lot of money changing hands, and a lot of really fast growth. And I think Duncan maybe didn't bite into it as much as I remember in those days. Elk City people were renting out a place in their garage for somebody to put a cot for $800 a month and things like that, and we never got it. There's a lot of old money in Duncan. At one time, Duncan was it was between Duncan and Alva about the highest bank deposits per capita. I did a study at one time, and I thought that was kind of interesting. But there's a lot of money in Duncan and a lot of old money, so we certainly participated in the boom, but maybe not to the extent that some of the other communities did. But
that is Alva. I did meet Marilyn Myers, and all about Gertrude and her sister.
Okay.
I mean, just wonderful stuff up there. But, I mean, I guess I've never been to Alva and certainly didn't know that story.
Yeah, at one time they had the highest bank deposit per capita in the state. But there was just a euphoria, and I remember one thing I remember is people that worked for Halliburton, maybe in the machine shops, and they had an excellent retirement plan, and they would retire or take early retirement and take most of their retirement money and buy some big lathe or machine and put it out in their garage and do overflow work for Halliburton. But then when it didn't just slow down, it just stopped, and there was a lot of those people with those machines that they owed, that invested their whole retirement in, that was worth about what it would weigh. A lot of people driving around in town cars and buying airplanes and with gold on their arms and necks, and we had all of that. Well, now here's the first year I was in business, 1985, which was kind of a couple of years after the bust began, I guess, but I used to brag that the first year I was in business, I made more money than all the banks in Stevens County combined. Now, it helps that one of them lost $2.3 million that year. Yeah, because they were negative, and I managed to stay in the positive. I think there were 9 financial institutions in Stevens County at that time. And I think the first year I was in business, I worked for 7 of them.
I wonder how many of those are still around by 1990 or something.
Well, the bank in Velma was one of them, and they're still around, and they're now a branch of, as you probably know, the First National Bank of Ardmore. The bank in Comanche was one, and it's just now a branch of the American National Bank in Ardmore. The First National and the State National in Marlow. First National still there. State National is a branch of Bank First. 3 banks in Duncan: the Security National Bank, the Oklahoma National Bank, and was the First National Bank, which they gave up their national charter and became First Bank and Trust, I guess, somewhere along the way. And all of the
what's there's Security National, First Bank and Trust, who's the third one here?
Oklahoma National,
Oh, that's it.
which is now a branch of Harvest.
Oh, it is, okay.
But all of the banks, except for maybe the First Bank and Trust, survived all of it. The First National Marlowe did not. It did not survive it. It had to get closed down and opened back up. We had there was a First Federal Savings and Loan, and Duncan, which failed, and there was a Duncan Savings and Loan, which failed.
Who's it owned by?
And they were not necessarily victims of the boom and the bust, but of interest rates and asset liability management. I think these numbers will be close. In 1985, there were 52 savings and loans in Oklahoma. The last time I looked, there were 9. Of course, they had no diversification. Basically, they were taking 6-month CDs that they were paying 4% for, and making 30-year fixed-rate mortgage loans and getting 8% yield, and just doing very well with that 4% spread. But then, when the boom came, the cost of money, those CDs were all of a sudden costing 12 up to 16%. And of course, those fixed-rate mortgages were still yielding 8, so it was interest rates that caused their demise, as well as a lot of the others. Wasn't necessarily because they had bad loans.
I was visiting with Frederick Drummond, but he's got a blast, on his desk. And one thing he keeps on his glass, somebody sees all the time, is a note from, what would that have been? Sometime in the early 80s. Interest rate of 18%. And he just kind of keeps that there as a memento of nutty days, I guess.
One day, had security along in there. I sold Fed funds. I was gathering up all the money I could gather up on a Friday so I could sell it for the entire weekend for 24%. 24%. That's the highest I recall Fed funds being, but it was crazy. Cost of CDs were up to saying up to 16%. And a lot of people drilling rigs and things. We had a large loan in security. Some people, looking back, you wonder how you make a loan like that. But people building a drilling rig, and never got out of it before they got it finished. The bus came, and so it was worth about what it weighed at that time.
You were so secure that Penn Square failed July of '82.
Yes.
What specific things do you remember about that watershed event?
Well, that place grew so far and so fast, and of course Beat Jennings came from Heelton down the road here, and so we were acquainted with him. But it was just, everybody that I knew and talked to, we all knew it wouldn't work. It couldn't last. It was just going too far, too fast. You're all, buying airplanes and town cars and all the stories that you heard, and selling participations in all those deals with banks in Chicago and Washington State, and you kind of wonder how much of the boom did they create by lending all that money and getting all the money from Chicago and Washington and maybe some other place.
Well, it certainly contributed to the hype, and you know, wooed a lot of folks into a belief that everyone can only go up.
And they had some of the old First National people went over to Penn Square. Dale Mitchell was over there, as I recall. A fellow that I worked with at Jim Pitts, P-I-T-T-S, was in the operations part of Penn Square. But it was just crazy, and everybody that I knew in the banking business just knew that, you know, they were going to work. It couldn't last. The price of oil, as I recall, went up to $44 a barrel. And they were sort of operating under the premise it was just going to keep going. It was going to be $100 a barrel. And maybe if that had happened, they'd still be here today. I don't know. But the next thing you knew, oil was $14 a barrel. And that's when everything started coming unwound. Another thing that security I failed to mention earlier is that after Penn Square failed, the owners, the McCaslin family, at security and the ownership of Citizens National Bank in Muskogee, the Rooney family, went together and chartered the Charter National Bank in Oklahoma City, which was located in the drive-in bank property at Penn Square. So you can kind of get a vision of what, kind of how it's set. I mean, there's drive-in banks, you tend to think, you know, a little place about this size with some windows out there. But their drive-in facility was more room than we needed to start a new bank. So that group purchased the property from the FDIC, who was a receiver for Penn Square at that time, and started a new bank, the Charter National Bank there. Ultimately, the security people kind of got out of that deal, and the Rooney people ended up with it. It ended up selling to Bank Forward.
Actually, I didn't realize that was that history. So the McCaslins and the Rooney. The Rooneys were First National in Muskogee?
Citizens. And I worked did work on the charter application and gathering up data and things like that. And a fellow named Albert Hurley was the CFO at Citizens Muskogee, so he and I worked together on a lot of the paperwork and applications and financial stuff.
You know how long they've operated as charter bank, the Charter National Bank?
They were one of our clients. We did audit work there. Gosh, time goes by so fast. I hate to say, but you could, or we could look it up on FDIC.gov. And
Okay.
you know how to do that, by the way?
I hadn't done that yet.
If you go to the FDIC website, and then there's a place that says for bankers, and you can go in there and do research for on banks, and then you can look at active banks or inactive banks, and I'm not sure exactly how far back it goes, but
okay. No, that's a good. So you maybe could have dates of the charters, closures, mergers, whatever it may be.
Yes, yes. And I think the Oklahoma Bankers Association website has such a thing. I know it does, because a lot of that information.
That might. Yeah, I think if I got to the point, I've gone through all the hard copies of the old magazines, but it was finished 1995 yesterday. And I started about beginning, it was 06, so no. But now I think they have those weekly magazines, monthly magazines online. or maybe in a PDF or something.
Yeah, but I think if you go to their website, you can go, they have like all the history of the banks, if there's one that's changed hands 2 or 3 times. I remember one of the banks in Woodward, I think it changed hands like 3 times in a short period of time.
Okay, well that's a good idea. So you experienced the fiasco of the 80s, and about that time you're going into your own business. So tell me about McCormack and Associates.
Well, I actually had, I thought, without being a president of a bank, I had one of the best jobs in the state of Oklahoma. I was in charge of everything except the trust department and lending. I never really wanted to be president of a bank, not that I thought I couldn't do the work, but just the requirements of, fundraising things and making sure you get the Rotary every Wednesday, and then I think you might have had to actually learn to play golf, and I didn't want to do that. And so I'd gone about as far as I could go at security or anywhere else in the state without becoming the president of a bank. So I was at a Chestnut meeting down in Austin, and Alex Chestnut made a presentation, and he was saying, well, the bank examiners are now expecting banks to have budgets and financial plans and do strategic planning, and then the other thing is that 1985, that's when PCs were first coming out, or the Apple PC, the IBM PC. Apple had been around a little while, but that was just emerging, and all of those things, that was my deal. That was what I did for a living, and so I was just, I don't know, somewhere. I woke up one morning and decided to pronounce myself a consultant. I had worked with 6 or 8 of our correspondent banks, and I would help them with their problems or give them advice, or if they had a question about the call report, and several of them were on we had spun off our data processing department into a separate company and provided those services to other banks, and I just enjoyed helping those other banks and the smaller banks and working with them and helping them solve their problems, and so I woke up one morning and decided that's what I was going to do.
So at that time period, what would you say were some of the biggest problems or challenges facing your clients?
Well, that was, and opportunities, I think the challenges were to have financial planning and budgeting, and believe it or not, that was pretty rare in the banking business back in those days. And now there were people, asset liability management, another thing. We were doing that before we even knew what to call it. But there were people, and Mr. Ira Green is one of them. He didn't know what to call it either, and he didn't have anything on a computer or even but it was intuitive to him. He just did it. But policies and procedures, things like that, and when times got tough and they were closing banks and found that banks were just weak in having good policies and having good procedures, and a lot of those lenders were more like entrepreneurs in those days, and would have a lot of oversight or corporate governance, and so all of those things, kind of the behind the scenes, the operational, the financial stuff, again was what I was interested in and what I was doing. So early on, a lot of our work ended up being in with PCs, installing personal computers in banks and putting software on them and training banks to use them. We set out to be market-oriented and not really have a real hard picture of what we were going to look like, but just find out what the needs were in the business, in the banking business, and which ones we could help solve, and figure out a way to make a little money at it. When I left the bank, Jack Maurer, after I'd resigned, he came around to see me, and he wanted to, see if my decision was final, and he didn't put a lot, any pressure on me or anything, that I could have stayed if I wanted to, and I guess this is encouragement. He said, I'm going to get this exactly right now. He said, I don't know if these tight-ass old bankers can be separated from their money or not, but if anybody can do it, you can. But he did keep me on as a consultant, didn't he, a retainer for a year to continue with the asset liability management and to help train my replacement. So at least I knew I could. It was a big decision for me. I had 3 kids in school at that time, and so he kept me up. I was on a retainer for a year to do that. At least I knew I could feed my family. I didn't know if I could do much else, but.
What's his name? M-A-U-E-R?
M-A-U-E-R.
So I guess it's safe to say then that you're going into business by yourself was driven by new technologies and new legislation and regulation?
Regulations, yes, yes. And a lot of these things, I guess, a lot of the regulation we have now is just totally unnecessary and doesn't help anybody, particularly the people it's supposed to help.
We do want to tap into what you think about all that, for sure. That's a topic into it.
Yeah. But looking back, a bank or any business needs policies, they need procedures, they need an organization chart, and who's supposed to do what. And banks are just really slow in coming around for that and having financial plans and budgets. They were used to just flying by the seat of their pants, I guess. And I still use this today. Well, if you're lending for one of your commercial borrowers out here, and you start asking them questions about, well, who are your major competitors, and how are you going to price your product, and what's your continuity of, what if something happens to you, continuity of management, now what? And what is your financial, and do you have enough capital to make it? Well, banks were asking their customers all those questions, but nobody was asking the banks.
Not interesting.
So, a lot of those things, it was hard to say that, banks didn't really need those policies, or they didn't really need those procedures and things like that. Just good business. But that's not the way it is now.
Yeah, maybe, if you think of any, milestones along the way, late 80s through the 90s, any particular legislation, any particular, issues that strike you, but then I would like you to comment some of where we are today with all these new regulations.
Well, and one thing that's I guess in Oklahoma not all that unique, but somewhat the Security National Bank, L.L. Humphreys bought the bank and managed it from 1923, say. He was president of that bank till Mr. Paddington, which I think was maybe 1959 or somewhere in there. And then after that, Charles Storm was the president of the bank for about 10 years. And then Jim Wheeler was president of the bank for about 10 years. So there's what, four bank presidents from 1925 to 1985 for sure. Not very many, not much turnover at the top. And some of the big deals along the way was Regulation Q, which regulates the interest you can pay on deposits.
Who's that date to about when was that?
Sometime early, mid-60s, 65, 66, something like that. And the first CD that banks were able to offer under that reg was a 6-month Treasury bill CD. So most of the banks had checking accounts and savings accounts, and then you could offer a CD for 6 months and pay a certain percentage above what the 6-month Treasury bill was. You just kind of locked into that. And then that just kept, getting broader and broader and broader until today. Most recently, we don't have Regulation Q anymore. Over time, we got the now accounts, and we just pay interest on the transaction account. And when we had Reg Q, it would dictate how much interest you could pay on a savings account.
Okay.
You could pay 2%, and then they would change it to 2.5 or 3. And so the interest back then, banks pretty much had a monopoly on checking accounts and commercial lending, and their cost of money was pretty much fixed and controlled.
Yeah, that's what I understand. It was so, well, there was a little competition for deposits and so forth. But really, it was, you understand, it's regulation or technology. The regulation's trying to catch up with it to bring in all the competition.
Yeah, and they broadened the, back then credit unions were probably doing what credit unions are supposed to be doing, and savings and loans weren't allowed to have checking accounts or make any kind of a loan other than a mortgage loan on your home. And all those powers, of course, were expanded, and July 21st of this year, the last part of Reg Q is going to be gone because banks will now be able to pay interest on commercial checking accounts.
Okay.
It's about the only thing left, so Reg Q is gone. And it opened up the market to interest rates, and maybe the most unfortunate, one of the most unfortunate things now is the credit unions, which have just expanded beyond what their original intent was, and of course it hurts all of us bankers that they can be out competing with us, and but they don't have to pay any income tax.
Oh, I don't think I realized that. The credit unions don't pay income.
They don't pay income tax. So they've lobbied and got their powers expanded where every year they're more and more competitive with commercial community banks. But they don't have to pay income tax. So if they can make commercial loans or take checking accounts, and then they can pay a higher rate for their deposits and charge a lower rate for their loans, and still come out okay if you don't have to pay income tax. So,
well, it's kind of a broad question, but I guess it's sort of inevitable. Where do you see the biggest challenges in the banking industry? There's so much competition and so much regulation coming down the pipe. A lot of the things you're talking about. Where do you stand now? Where do you think it's going?
Well, it's the regulation, and it's virtually impossible, I guess, to calculate the cost of all of this regulation. But and this Dodd-Frank bill is of course the most recent and the most onerous 2,300 pages of legislation that I bet my house that 90% of the people in Congress that voted for it didn't read the whole thing. There's going to be 500 new regulations come out of that, this new Consumer Protection Bureau, which has pretty much undefined powers. Some of the smaller banks are already finding it hard to, I don't want to say hard to compete. They can compete if we'll just let them alone and let them do what they do. But all the rules and regulations, and we've had, well, in the last 3 or 4 years, the bank in Velma was about a $20 million bank. It was owned by the Duncan family. And the bank in Waurika, about a $20 million bank. It was owned by the Stewart family. And they were doing okay. They were profitable every year, and they weren't growing really fast. But you just keep piling on, and they couldn't, you couldn't really see the future in the deal. Both of them were in communities that weren't necessarily growing, so they should have been able, there should be a way they could stay in their community and serve their community as long as they could make money and they had their own capital at risk. But basically we're forced out by all of the new regulations. And neither one of these banks were for sale, but they knew what was going on, and then somebody came around and made them an offer, and they're out of there.
So they're both now branches or Ardmore?
Well, the Waurika was Waurika National Bank, and it is now a branch of First Bank and Trust of Duncan.
Oh.
And the Velma Bank is a branch of First National Ardmore. So you look at that and say, well, back then, if you're a $20 or $25 million bank, it's pretty tough to compete. We do compliance audit work. It's our forte. And when we go do a compliance audit for the bank in Velma, $20 million bank, and then say we go do a compliance audit for a $100 million bank, well, we have to cover the same ground. The sample size is smaller and things like that, but they're 1/5 the size of a $100 million bank. But we have to charge them 75% as much as that other bank. You see, so they just couldn't spread the cost of compliance, and what they were paying us is a small percentage of the cost of compliance. They just have a smaller asset or smaller revenue base to spread that cost of compliance across. I don't know what the number is now. Rainbow's bought, Bank First has bought 3 or 4 banks this year. $80, $100 million banks, maybe even a little larger. And in most of those cases, it's where the owners, family-owned banks, and the owners were in their 70s. Maybe they didn't have children interested in banking, and the banking system is not fun anymore. You feel like you're going to work, and you're working for the regulators or the government, rather than your customers and your community and your shareholders.
That could be, that's a direct quote from what Ben Watkins said.
Well, he's one of those guys. Yeah, yes.
I caught him. I really appreciated he came in from a deer hunt out of Winoka. And, maybe there in Chandler, but I got there the week that Bank First signage went up. And I drove down Main Street looking for Union, didn't see it. But, maybe that's there. I think that's the address. But, and we kind of laughed about that. But he said exactly the same thing. It's just got to be not too much fun.
Yeah. And it's work, going to work every day, or you just dread it, or you wonder what's going to happen next, or what's going to be the hot button for the bank examiners this time around. It's onerous, and I don't know what's going to happen. I have a hard time visualizing or imagining how it's going to get fixed or how it's going to get better. This entire Dodd-Frank deal. Well, at first there was talk and movements, and Roger Beveridge is involved, and we've got to do something, we've got to lobby, we've got to get all this whole deal just thrown out and overturned. Well, it didn't take but about 15 minutes for that to go away and say, well, that's never going to happen. We'll have to chip away at some of the edges of this thing and try to, and there's been some delay and maybe a little bit of rework, but, it ends up being that 90% of it's going to come through.
I think it's July 2021, yeah.
It's just a one-year date when a lot of these things take effect. Now, Gene Rainbow and Bank First are a very good regional bank. But I want to use the model of the State National Bank as an example. When it was State National Bank and owned by the Green family, every good thing that ever happened in Marlow was, it's not because they were there, but they were involved with it. They were involved with the city